Hello and welcome to the Business Standard Morning Show. This is Thirumoy Banerjee and here's a look at the stories for the day. Quick commerce platform Blinkit claimed on Wednesday that most of its stores in NCR have reopened. The Zomato-owned company was grappling with a crisis of sorts for the last few days, as hundreds of its delivery partners were on strike and stores shut. They were protesting against the company's new payout structure, claiming that it would cut their monthly earnings by half. The company, which is struggling to cut losses, has refused to budge. So, is the Blinkit's business model sustainable? Telecom's report has the answer.
हमारी मांग है पूरा करो। 7 रुपए में कोई काम नहीं हो रहा, पेट्रोल महंगा होते जा रहा, सारी चीज महंगे होती जा रही है। कंपनी अपना रेट बढ़ा रही है, लेकिन हमारे जो राइडर है उनकी मांग नहीं सुनी जा रही है। हमारी 50 वाली आईडी वापस लाओ, हमारी 50 वाली आईडी वापस लाओ।
When people couldn't go out for shopping essentials during lockdowns, shops came to their doorsteps. The concept of quick commerce, in which items of daily needs are delivered to homes swiftly, also gained ground during the period. But when kirana shops, which sell groceries and other products, operate on a thin margin, questions are being raised about the sustainability of the quick commerce business model. Blinkit, which was earlier known as Grofers, was one of the pioneers of quick commerce in India. It was acquired by Zomato last year for $550 million. Blinkit has around 400 stores in India now and around 100 are in NCR. Loss-making Blinkit revised the pay structure for its delivery partners early this month. Under it, the minimum payout per delivery has been reduced to 15 rupees per delivery from 25 rupees for orders in 1 kilometer radius. And beyond that, there is an incentive-based pay structure which is dependent on the distance that the partner travels. Through the new pay structure, Blinkit was hoping to increase the radius of service around its dark stores and better customer experience. But its delivery partners went on a warpath, bringing the business in NCR to a grinding halt. They were demanding a rollback. The workers' union has put forth a set of demands, which include increasing the minimum pay to 25 rupees, no termination of access for a rider even if they are unable to log in for 20 days, reverting to giving payment from cash on delivery orders to store manager and arrangement of water and toilets for the drivers. According to brokerage firm ICICI Securities, the strike has caused Zomato a loss of 1% revenue and 0.15% of consolidated revenue of Q1 of FY24 from Blinkit. This is in addition to the losses in the previous quarters. In the December quarter, the adjusted EBITDA loss from Blinkit was 227 crore rupees. This raises questions about the viability of its business model.
I think it's a very emerging business model, and the reason why it's making losses is because two, three things. One is, of course, that a lot of money is spent around product awareness, around what is the kind of positive impact of this business, and how will the customer actually benefit out of it. So a lot of money is spent around customer acquisition cost for the app. That's one. A lot of money spent on marketing. Secondly, I think the margins in this business are very, very low. Because clearly they operate into the the household item or the FMCG item business, wherein the margins are anywhere in the range of 10 to 15%, right? And the third thing is that the delivery cost of this business is very high. So if you look at this on a per order basis, generally what happens is that, on a delivery of which is a 2-3 kilometer radius kind of a thing, a delivery boy or a partner would rather charge about 50 rupees on a per order basis. But the average order value in this quick commerce is not more than 455 rupees.
It is projected that revenue of quick commerce will reach $1,408 million in 2023, and the number of users is expected to touch 52 million by 2027. But BharatPe founder Ashneer Grover has claimed that the concept of 10-minute delivery has no economics. He pointed out that low ticket size and low margin cannot be solved through forced low cost delivery. So, what is the road ahead for quick commerce when the margins are low?
I think your delivery partners are a very, very important part of your business in this case, simply because you are using your dark stores to deliver to customers' home. The last thing you want to do is have unsatisfied delivery partners. And 15 rupees does not make any sense at all for the effort which the delivery partner puts, leave aside the cost there. So the important part for Blinkit, if I was advising them, which I am not, is to relook at their business model itself rather than trying to reduce some of the losses by cutting costs where there are absolutely no room to cut.
And is reducing the minimum delivery cost a solution for Blinkit?
I think that the overall definition of quick commerce, which today is hovering in the 10 to 15 minute range, is going to expand a little bit towards a more 1 hour or 2 hour delivery, which could still be termed as quick commerce, and the consumers would be happy to accept that. And I also think that there will be a delivery charge that will come in, much as what we've seen in the case of food technology or food tech and the overall food service part of what Swiggy and Zomato are doing. With these two changes, I think the overall path towards profitability could look much more encouraging than it is right now. And as we've seen in the case of e-commerce and many other new emerging models, it takes a few years before these models stabilize and become profitable.
Most quick delivery platforms are designed in a way that the delivery partners get between 15,000 to 20,000 rupees a month, and without any benefits of social security. With inflation in food and petrol rising, companies should be mindful of how the workers, whom they address as partners, will run their families. There is some hope from proposed labour codes meanwhile. In July last year, the centre had said that the states were finalising the adoption of the labour codes and they would be implemented at an appropriate time. But several states are yet to do this.
These delivery partners will have to weather another big challenge in the days to come: the rising mercury, which soars to 48 degrees Celsius or more in the months of May and June. The Indian Meteorological Department recently issued heatwave alerts in central and northeastern parts of India. This comes after a bout of unseasonal rainfall. Farmers had to delay the harvest to protect their produce. So, what does these erratic weather conditions say about India's climate? Tushar Verma brings us the answer.
On 18th April, the Indian Meteorological Department released a list of 38 of its stations which recorded a temperature above 42 degrees Celsius. It shows that heat wave-like conditions prevail across the country. According to IMD definition, heat wave is declared when normal maximum temperature exceeds 40 degrees Celsius in plain regions and 30 degrees Celsius in hilly regions. As of now, alerts have been issued in Gangetic plains of West Bengal, Odisha, part of Northeast India and Eastern UP. Earlier, a similar alert was issued for Delhi, Haryana, Punjab, and central India. These weather conditions, which are classified under adverse weather events, are increasing in frequency. The summer of last year was the 5th warmest year in India's history, and February 2023 the hottest since 1901. So, what do heat waves say about India's erratic weather?
Usually, temperature starts increasing by first week of April, but this year we have seen the second half of March witnessed pre-monsoon activities, widespread pre-monsoon activities across country. So temperature remained below normal, but since last 4 to 5 days, weather has gone dry, and dry northwesterly winds are prevailing, and temperatures are increasing. Usually, March, April, and May, these are pre-monsoon months, and April, May are hottest, and the temperatures, we can say the above normal temperatures persisted until first half of June, until monsoon reaches northwest India.
IMD had attributed weak western disturbance early in the year as a reason for heat waves. The same western disturbances are responsible for bringing rains in India in the form of monsoon. March 2023 saw many rainy days which were unseasonal and adversely impacted wheat crops. The first batch of harvest was of poor quality. The concerns around El Nino are also there. An El Nino year leads to poor monsoon and risk of drought in the country. So, how do unseasonal rains and El Nino impact India's agriculture cycle?
Last 3 years was La Nina year and monsoon was normal to above normal. But now we are in neutral condition. Gradually, it will be La Nina evolving El Nino, and sea surface temperature over Eastern Pacific will start increasing, and it will adversely impact our monsoon, southwest monsoon. From later part of July, impact of El Nino will be felt, and August and September will see lesser rain than normal, which will impact the output, crop output, and the rain-fed areas will be hard hit.
Heat waves also have an economic impact. They cost India an income loss of 5.4% of gross domestic product in 2021. There was also a 55% jump in deaths due to extreme heat in India. In 2022, 2 million hectares of crops were affected due to extreme weather conditions across the country. Let us hear experts give insights into this.
For 2 consecutive years, we are seeing that the wheat crop is getting impacted. This year, the rice also got impacted because there was a drought-like conditions in eastern part of India, in Jharkhand, Bihar, Odisha, some amount of Chhattisgarh as well. Then when the wheat crop is ready, in the Rabi season, there is suddenly the unseasonal rain starts, and there is a sudden spike in temperature first in month of February. But against all this, within just a few months, few days, in fact, in less than 15 days, the entire scenario changed, and there was massive rains in the wheat growing areas of northern India, central India, even parts of Gujarat, which impacted the standing crops. So all in all, this has a huge economic impact on the crop, on agriculture, on farmers' incomes. If economy does not grow, the FMCG sales don't come up. Two-wheeler sales, we are seeing for a prolonged period of time, it is not growing. Farm wages haven't grown for a very, very long time. Real farm wages have almost been stagnant for the last 4-5 years.
Climate change is very much a reality. India too is bound to be impacted. Experts say policy changes in agriculture and economy are the need of the hour. So, what are these policy interventions that can help India combat such extreme weather events?
From the point of view of agriculture, we have to have now focus on seeds, on practices which are resistant to volatility of weather, be it excess rains or dry warm weather or prolonged period of dry monsoon breaks. We have done a lot of it. We have developed seeds, like in case of wheat also there was some reports that we are developing seeds which will mature early, which will be resistant to heat wave. But we now need a more concrete intervention into the ground. We need more extension activities. We need more promotional activities. We need more incentives to the farmers to gradually shift to these things. Similarly, for economic activities, you also have to take into account, you also have to understand that this is a reality and this is a challenge that you will have to face every year. So while in terms of disaster mitigation activities, we have done a very good job now in disaster mitigation, but how to rehabilitate the people, how to restart their economic activities, like in case of farming, crop insurance or hedging the risk is a very big solution.
The Sharm el-Sheikh Climate Change Conference adopted many decisions, including limiting global increase in temperature by 1.5 degrees Celsius and greenhouse gas emissions peaking by 2025. However, the latest climate pledge by countries, including India, shows that there will be less than 10% cut in projected greenhouse gas emissions by 2030. This is bound to have adverse effects on the climate, such as heat waves and erratic weather.
Meanwhile, with the rollout of 5G services, Reliance Jio and Bharti Airtel can no longer engage in a price war in the mobile broadband segment. The growth in the segment has also slowed down, with most of the 2G to 4G and 5G upgradation behind us. So, where will the next leg of growth for telecom companies come from? And should investors add related stocks to their portfolio? Here's a report by Nikita Vashisht.
Investors have refrained from dialing the shares of telecom services providers so far this calendar year. With growth in the wireless subscriber segment beginning to plateau, amid higher tariffs and rising cost of smartphones, the shares of Bharti Airtel and Reliance Industries, which is the parent firm of Reliance Jio, have fallen up to 8% so far this year. Those of Vodafone Idea, meanwhile, have crashed 23%. By comparison, the BSE Sensex has slipped just 1.8% year to date. Analysts, however, see this underperformance reversing, with the telecom services providers focusing on the next leg of growth, which is the fixed broadband segment. According to a note by Yes Securities, fixed broadband growth is set to pick up, led by low penetration, affordable tariffs, and falling differential price compared to wireless data. Moreover, the demand for work from home, learn from home, etc., will drive demand for fixed broadband subscriptions. India's fixed broadband or FBB subscribers have inched up 24% year on year to 33.1 million in January 2023, while Jio Fiber added 190,000 subscribers that month, clocking a growth of 62% year on year. Bharti Airtel added 140,000 subscribers, up 35% year on year. The growth comes at a time when industry-wide mobile broadband subscribers have remained flat of late. Add to this, Reliance Jio recently launched a fixed broadband plan starting at 198 rupees per month. However, while analysts say Bharti Airtel should launch its competing plan to avoid any customer churn, they say it remains to be seen if Jio would be able to mirror the success scripted in the mobile broadband segment.
But the impact of Reliance's moves in other segments like home broadband or the fiber to the home market FTTH, that has been less profound. The key challenge is limited applicability. Unlike smartphones, which are personal use devices, FTTH is taken by families, especially those who are engaged in white-collar work for productivity reasons. Reliance is trying to overcome the price barrier for FTTH adoption by offering a 199 option for a 10 megabits per second connection. This increases to 399 including streaming TV subscription and Jio set-top boxes. We think that Reliance did this coinciding with the IPL launch on Jio Cinema. So they want people to watch IPL on Jio Cinema instead of the traditional TV where Star has the rights, Disney Star. So we are not sure whether this move will succeed or not. The price point is attractive, but the streaming speeds are too low to enable very high quality streaming and seamless speed. But we do acknowledge that Reliance will keep trying and do what it takes to expand the FTTH market. We think that connectivity bundled with differentiated hardware like gaming, home surveillance, e-learning, along with affordable and widespread availability of high bandwidth could be a game changer. Sometimes Reliance's announcements don't fructify, perhaps due to market limitations.
Given this, where should investors put their money?
While Jio has emerged as the dominant market leader for smartphone and fiber to the home users, it has met with limited success among high-value users like enterprises and the postpaid segment. Airtel has done better in the last 2 years. This has resulted in Airtel's returns also being superior to that of Jio.
Overall, analysts see up to 20% upside in Bharti Airtel and 22% upside in Reliance Industries. On the flip side, they see up to a 14% downside in Vodafone Idea shares. Overall, the long-term gains may face bout of volatility due to near-term overhang of 5G-related capex, subscriber churn and aggressive dividend payout policies. On Thursday, Q4 results of Cyient, HCL Technologies and ICICI Prudential Life Insurance will be tracked by the markets. Besides, weekly FNO expiry and global cues may keep indices volatile.
The year 1991 was a turning point in India's economy and for the markets too. The economy was thrown open for foreign companies. But a group of industrialists was anxious and wanted a level playing field. This group was later dubbed as the Bombay Club. The fabled club was in the news again recently after the death of industrialist Keshub Mahindra, who was said to be a part of it. So what was this club? Raghav Agarwal explains.
India of today is much different from what it was before 1991. Its economy was tightly controlled by the government. Terms we often come across today, like competitive forces or open market, were not as common back then. On July 24, 1991, the Indian government led by P.V. Narasimha Rao undertook liberalization, privatization and globalization or what we call the LPG reforms. The Industries Development and Regulation Act of 1951 was abolished. All licensing of new industries, barring a few sectors placed on a negative list, was removed. The 4-decade-long license permit Raj came to an end. Well, almost. This opened the Indian shores to foreign companies. But some businessmen in India feared that the reforms would hurt the domestic industry. In his biography written by Geeta Piramal, industrialist Rahul Bajaj later said that 16 businessmen met at the Belvedere Club in the Oberoi in Bombay and finalized a representation to the finance minister for a level playing field for Indian businesses. This informal group came to be known as the Bombay Club. The details are sketchy, but the group included Nasli Wadia, Jamshed Godrej, C.K. Birla, and M.V. Arunachalam. The group prepared a 13-point charter and met with then Finance Minister Manmohan Singh on November 10, 1993. Montek Singh Ahluwalia, then Special Advisor to the Prime Minister, said that they demanded domestic liberalization today and external liberalization later. The club demanded that there must be several domestic reforms, including labor reforms, before the economy is opened for foreign countries. They added that the tight credit policies in India and high interest rates placed Indian businesses at a disadvantage. Bajaj said that after the representation, the Finance Ministry asked the businessmen to not go public. Later, in August 1997, Bajaj wrote in a magazine that people had a wrong impression that the Bombay Club was protectionist and wanted the reform process to be rolled back. He said that there was no such thing as Bombay Club. But Bajaj said that almost all the big Indian companies in future should not become foreign controlled. In 2022, his son Rajiv Bajaj tweeted that the Bombay Club was a figment of the media's imagination.
I will achieve, I will fly high. SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Writing in Business Standard on the death of Keshav Mahindra, former chairman of Maruti Suzuki R.C. Bhargava said that Mahindra was of course a part of the famous Bombay Club. That's all for today. For more news and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.